Hey there, it's Mitch Goldberg. Welcome to my live stream. It's your post-market show every Monday through Thursday at 4:30 p.m. We go through the day's market action, the biggest news. We talk about personal finance, financial planning, investing, the things that you need to know to take control of your money so you could be the boss of your money. That's what I call the show, Be the Boss of Your Money. Today, though, I want to focus on all the rage, the hot thing, EVs, electric vehicles, Lucid, Rivian, Lordstown, of course, Tesla, some of the charging station companies, etc. What is going on here? These stocks have been on quite a tear. They've gone up so much in just the last week or two. Is it worth chasing these companies? Is it time to let them rest, or is it time to maybe let them fall back to earth and pick among the rubble? That's what the show is all about. We're going to get into it today. So stick with me. Here's the introduction. And if you have any questions, of course, please ask them in the comments. And here we go. All right. Thank you so much for joining me. We're just getting started. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. I want to focus right now on the EV market, electric vehicle market. These stocks have been so freaking hot. I can't blame you if you're right now experiencing major FOMO, kind of like with crypto a couple of weeks ago. Now it's EVs. It just seems that every couple of weeks, there's a new red hot, or maybe I should say white hot sector that just catches the attention and imagination and money from investors. And then these stocks take off, and you scratch your head wondering, should I chase these? Shouldn't I be in these? Is this really the once in a chance lifetime? Usually these things are not the once in a chance lifetime opportunity, but we're going to take a look. Don't mean to sound negative, but I just want to make sure I give you the full, complete story. If you have any questions, please hit me up in the comments, either about what we're talking about today or other personal finance, investing questions. I love hearing from you. You may notice I've got the social media icons over here. Check me out. Follow me on your preferred social media platform, Instagram, YouTube, okay, LinkedIn, Facebook. I didn't even bother putting up Twitter because I'm just not active there. I used to be, but it's no longer really my place of joy. I see Rhonda here. Thank you so much. Very pertinent. I bought Rivian at IPO. You got Rivian on the IPO? Well, congratulations, Rhonda. That is a home run, and I am very, very happy for you. I want you to know, are one of the only, you're the only individual investor I know who was able to get it. Good for you. Hold on. Okay. I hate when I tug the wire here by accident. Okay, so it's my OCD. Good for you. I'm very happy. And by the way, Rhonda, thank you very much for joining me today. Thank you very much for joining me today. It's always a pleasure to have you here. So a couple of things to take a look at. And, we always do our update for the market and the rundown on today's action. So let's take it to the tape. Prop myself up in the screen. Let me get rid of the social media icons. They're blocking things. Boom. Okay. It's an overlay. That's why you could see through it. All right. So the Dow is off today, 217 points. Not the biggest deal in the world. I want to blow that up nice and big so you could see it on your smartphone, because I know most of you who watch this are watching this on your smartphone. So Dow off 211 points. I would say it's like the first meaningfully down day that we've had in a while. NASDAQ off 52 points, not quite as substantial on a percentage basis as the Dow. We had a couple of big winners like Microsoft hitting a new high today, which helped the NASDAQ and the S&P hold up. And that's why you see the S&P only off 0.26. At Nasdaq only down 0.33%. Okay, but the Dow is down 0.58%. Really, the Dow was down on the heels of Visa dropping about 5% on the day. Visa is one of the components of the Dow. It's one of the 30 stocks that makes up the Dow Jones Industrial Average. So Visa was down, and that was basically the responsible factor in pulling the Dow down. Gold was up a little bit. You know, we talk about gold never being able to get above 1800 and holding it. And then we've been talking lately, it finally got above 1800. Will it hold? $1,869 on the ounce. I'm thinking 1900 on gold. That sets up gold for a bigger return. The interesting thing is gold is off about 3% this year. So if gold is such a great inflation hedge, then why is it down this year? That strikes me as a strange thing. People say money's moving into crypto. I get it. Crypto, some people think of as an inflation hedge, and I could see that because there's only a limited amount, for example, of Bitcoin. But there are so many crypto coins out, and there are so many new ones coming out. I just think a lot of the cryptos are going up due to investor enthusiasm, FOMO, and it's just basically investors allocating to it. Investor enthusiasm is driving it, not necessarily worries about inflation. Okay, so that's gold, but gold has not been showing a hint of inflation worry, not at all. But maybe now that you check off the boxes of why inflation is transient, and you really can't check them off that much anymore. So maybe gold is telling us, well, you know what, maybe it really is real. We'll see. But oil continues to go down. It was in the 80s, now in the high 70s, and that's a pretty big drop for oil, down almost $3 per barrel. 10-year Treasury yield is down. Well, if there was so much inflation, we would see the 10-year Treasury yield go up, not down. But that's the kind of day it is. And the VIX went up a little bit, really because the major averages were off a little bit, but still no great shakes. The Russell 2000 was the big loser of the day, down here. You see this? Down 1.16%. All right. So that's the big loser of the day of the major averages. So let's talk about one of the stories here. I want to continue this from yesterday very briefly, but with two different stocks. Okay. Yesterday, you had Home Depot and Walmart come out with earnings. Home Depot beat, stock went up a lot, went up like $20 a share. Walmart beat, went down. Today, Lowe's beat, went up. Target beat, went down. So Walmart and Target went down. Home Depot and Lowe's went up. And I think this is emblematic of a bigger picture thing. And that's what I love about stocks is the stock market. Sometimes it shows you something a little bit bigger than you expected. It's like this, a battle of the haves and have-nots. The haves are the people who own homes, who own assets. They're doing great. They are not deterred by inflation. They're spending money at Home Depot and Lowe's. Home Depot and Lowe's, by the way, are higher profit margin stores than Walmart and Target. Walmart was down yesterday after a good earnings report. Target down today after a good earnings report because investors are trying to stretch their dollars. So the haves who own homes are buying high-end goods, high profit margin goods at Home Depot and Lowe's. The have-nots are struggling, especially under the weight of inflation, and they're going to Walmart and Target to try to stretch their dollars and get they're trying to get as much bang for the buck as possible. And I don't think that Target and Walmart having good earnings is actually a great thing to celebrate. And I think that's why those two stocks went down. Yes, they're also struggling with the weight of worries about profit margins because of inflation. But my feeling is they are indicative of something else. So the averages have been sliding, been flat to sliding down a little bit the last week. And I think that is either the market marking time to catch its breath for the next leg up, or the stock market is losing energy and more stocks are starting to fade the recent rally and the market's ready to have a dip. Tom Lee at Fundstrat says we are going to hit a buyable retreat, not a major retreat, just a buyable down market. I don't know what he says. Is it 5% down, 10% down? We'll see what happens. I am not making changes to client portfolios because we might see a buyable dip over the next few weeks. That you know, it's not that meaningful to me when I'm a long term investor, and so are my clients. So let's turn our attention to okay, let's turn our attention to the EV stocks because I want to get through this. Okay, about a week ago, okay, I'm sorry, 2 days ago, I posted this on LinkedIn. Let me show you. We are right now on my LinkedIn timeline, and if you are not aware, I am very active on LinkedIn. I post all of my content there, but I post other people's content. I'm looking to post educational, thoughtful, and thought-provoking stuff on LinkedIn, and I love making connections with people. So if we're not connected with LinkedIn, if we're not connected on LinkedIn, and Mitchell Goldberg, there you see it. Okay, but what I wrote here is with anything to do with EVs, now all the rage in the stock market, it begs the question, how much do you really save driving an EV versus a combustion engine vehicles? Uh, and my conclusion was buy one because you think it's a great car. You're saving a little bit on gas, a little bit, because you also have to pay for the charging of your car. And if you charge it in your house and you have a garage, better. If you're charging at an external station or so that you have to pay more for, it's not such a great deal. But as EVs go down in price and they become cheaper than combustion engine cars, that will change the economics. But I think people like EVs as much for no gas and good for the economy, and they come with so many bells and whistles. These are basically computers on wheels, and we like computers. We like smartphones, like they're like computers. So why not drive in a smartphone instead of driving a combustion engine with a smartphone on the passenger seat or in the glove or in the cup holder? Okay, you get my drift. Let me get rid of that. I have a lot of screens open. All right, and then we're going to take a look at a watch list here. Okay, you know what I'm going to do? We're going to take a look at a watch list here, and I want to show you. I just made a brand new watch list um, just for the show. Okay, just for the show. It's all the way down here. I'm so glad we're not talking about reopening versus pandemic stocks. I was getting really sick of talking about those all the time. So here we go. Okay, so Tesla, Rivian, Lordstown Motors, which the symbol is RIDE, and Lucid are the four that everybody's talking about. These stocks have had some monster runs, and even though you see Tesla, all right, even though you see Tesla backing off, let me see who's out there, by the way. Guys, while you're watching this, I see you, Joe Marazita, out there, the DJ, the best ever. By the way, if you're having an event, bar mitzvah, wedding, corporate event, what have you, call my friend Joe Marazita. He is just incredible. He brings this energy to an event, to a party, that you just can't get anywhere else. Okay, but back to me here. While you're watching, leave a thumbs up, and I'll see who you are, who's watching. But these stocks have been all the rage. Anything that has to do with an electric car, and it's charging stations, it's batteries, it's the cars themselves. Okay. Now, Tesla, if you see this red line over here compared to the green, this is how much Tesla has come off its high of 1243, closing at 1,089. And that's after being up 34 points today. But the stock is still way up this year. It's just about $1 trillion valuation. Kathy Wood of the ARK funds believes that this could be a $2.5 to $3 trillion valuation one day. So she's expecting a double to triple in Tesla as much as it's gone up. And her contention is Tesla is not about cars. It's about so much more. Kind of like Amazon was never really about books. It was always about so much more. We just didn't realize it. Certainly Barnes & Noble, who decided to compete with Amazon by selling books online, never realized that books for Amazon, that was nothing. That was just like the gateway. All right, we've got a couple of big moves after hours trading. I just want to take a look at this here. Okay, Nvidia shares gain about 3% in extended trading after issuing strong fourth quarter guidance, beating top and bottom line. Nvidia is really important because it's one of the biggest stocks now on the stock market, and it's probably your next $1 trillion company, but it's up $10 in after market trading. Okay, so let's get back to the watch list. Sorry, I'm bouncing around here, but I'm having fun, and I want you to have fun too, though. It's like if you're not having fun, then what are we doing here? All right. Let me get back to my EV watch list. I don't know if you saw the tweets from Elon Musk, which is what knocked Tesla down. Tesla had been on a tear. I want to show you the chart. Okay, here's the chart. Let's go to the 1 month chart, the 5-day chart. It's just really a 5-day chart for Tesla. Doesn't look like what I expected. Let's do the year-to-date chart. This is Tesla year-to-date. From down here, from 700 to 1,000. That's a big move, but it was up here. So you see this up here, this tip up here? This is what Tesla just gave up. This is all told from October 25th to today. So you're talking like 3 weeks of trading. 3 weeks. That's this whole thing over here. And what happened is, I don't know if you heard about the famous tweets, but here it is. Elon Musk says, I want to show you. So do you guys follow Twitter? I follow Musk on Twitter. Okay. And make this nice and big. Damn it. I lost it. I want to show you his tweets. Don't you hate that when you're in a live stream and what you want to show people, you just pass over and it's like really annoying. Here it is. Okay. I found it. All right. Much is made lately of unrealized gains being a means of tax avoidance. So I propose selling 10% of my Tesla stock. Do you support this? And he put up a tweet, a Twitter poll, and about 58% of respondents said, yes, you should sell 10% of your stock. So let me make sure you can see that. You can see that. Yes. 3.5 million votes. 42% said no. So his response also was, I will abide by the results of this poll, whichever way it goes. So Musk has now been selling stock, and that's what basically caused Tesla to give back the last 3 weeks of gains. But before that, the stock had gone parabolic. Then it dropped about 15% after this poll. Okay. So you've heard a lot about it, but if you haven't seen it, now you have. So I'm just here bringing you the latest, bringing you popular culture, the stuff that everybody's talking about, making sure you get a bird's eye view. All right. So back to EV stocks. And then you have Rivian, which just went public at, I think it went public at like 90 or 95. What's the difference? 100, let's say. And the stock went to 179. Backed off at 146. It was lower today, but it's 146. So 179 yesterday, and it hits 146. So it's like an $18 stock going to 14 and change. Okay. So that's what is going on with Rivian. Do you buy it? I mean, they're not going to have earnings and revenues for ages. Lordstown had some worries about malfeasance. Okay, Lordstown. Lords. I don't know if you could see this. Let me make this bigger, and I'll highlight. Oh yeah, I can make this a lot bigger. Okay. Lordstown continues to be under investigation. You see that? Okay. Lordstown continues to be under investigation by the Securities and Exchange Commission related to potentially false or misleading statements from former management, including former CEO and founder Steve Burns, who has since left the company after the internal investigations. I mean, for the CEO who founded an EV company to leave, that says a lot. So that's why Lordstown continues to be the laggard in that whole space. All right, get back to my list. So it's like if you had to pick one to avoid, it's probably Lordstown. So you see these stocks and you see Lordstown at its low, and you're like, oh, it's $5. Why don't I bet on that one? Because I could get a lot more for my money, a lot more shares. But I wouldn't look at it that way. It's all about quality. Rivian at least has a backing from Ford and Amazon, presumably. Well, they said they're going to buy a crap ton of Rivian trucks, delivery trucks. So they're going to ramp up production, but it's going to take about 3 years for them to really show that production. So they're going to make like nothing this year, probably nothing next year. But in 2023, they said they're going to really ramp it up. Okay. So, and then you have the charging companies like Blink, which was 64. Now it's 46. I feel bad. My friend Howard called me up recently a week ago. Say, hey, it's 38. What do you think of this? We've got the infrastructure plan going, and they're going to put money into charging stations. $7.5 billion out of a $1.2 trillion package. It's not a whole hell of a lot, but the stock was 30, went to 32, and I'm like, oh wow, maybe we should even touch that. But then the stock rocketed to 46 on a quarterly report. Not that they're making money, I guess, upping their forecast or losing less than people thought. Change point from 49 to 17, and Volta, I think this is a Swedish company. It's doing whatever it's doing. It's I just put this list together fast, but I want to give you my scenario on what's going on with EV stocks. Okay, so the EV stocks, what they remind me of is other sectors that get hot for a while that are going to revolutionize the world. You remember 3D printing companies, how these stocks were all the rage. They were going to change the industrial economy. They were going to change manufacturing. And just the enthusiasm for these stocks was so high. The stocks kept going up and up and up. And then everybody wanted them. They were talked about all over the media. Hot stocks everywhere on CNBC and wherever else you look. And they became popular stocks. And one day, just everybody's going to be making everything with 3D technology. And, finally, what happens is after the stocks go up, now the fundamentals, like the real earnings and revenues, they have to grow into the valuation. It's kind of like getting your little kid a size 5 shoe when they're only a size 2. You got the shoe, great, but now it's going to take a lot of time for the kid to go into the new shoes. That's my corny analogy. So that's what happened with 3D stocks. I think that's what happened with internet stocks. I think it's what's happening. It's probably happening with crypto. And now it's happening with EV stocks, electric vehicles. So are these companies really worth their valuations? Because the enthusiasm for Lucid is like doubled in the last couple of weeks. Rivian has taken off like a bat out of hell, like out of its IPO. And Tesla's gone up a lot in the last couple of weeks, although it's backed off in the last couple of days. I just think that Tesla is in a world of its own. Tesla is like the original. It's they're selling more EVs than anybody, but Rivian and Lucid are looked at as if I think investors look at Lucid and Rivian like the next Tesla. Obviously, that's how they look at it. But for people who missed Tesla when it was cheap, people see Rivian and Lucid as a way to do it again, or to do something that they missed. Maybe not. Okay, maybe it'll work, maybe it won't work. I remember people used to, when I was earlier in my career, people used to always say, I'm buying the next Microsoft. In reality, the way it worked out is you would have just been better off buying Microsoft rather than wasting time and money on the next Microsoft, because all the ones that were the next Microsoft bombed out, but Microsoft kept going. And by the way, Microsoft hit a new all-time high today. Okay. But these stocks like Rivian and Lucid, like to my opinion, is they go up a lot of the enthusiasm that they're the companies of the future, that they're the next Tesla, that they're you know asset light, that they don't have that they're unencumbered by combustion engines. It's like Ford and GM are trying to carve out new EV companies within their companies, but they're still encumbered by the combustion engine companies, the legacy business. So these new ones don't have that, the Lucid and the Rivian. But I think these stocks go up a lot, and either you have to now hold on to the stocks, and hopefully the stocks will stay flat while the company's fundamentals takes the next few years to catch up to the price of the stock, to the valuation, or the valuation has to go down to reflect that. Getting to the necessary fundamentals to justify the high valuations is going to take years. And then enthusiasm wears off. Investors get sick of hearing about quarter after quarter about growing losses and burning, and cash burn rates. And then the stocks just go down and they stay stuck for a while. That's what I feel. That's how I look at Rivian and Lucid right now. I have how much time do I have? I hope that makes sense. But that's my story. I'm sticking to it. So what else do we have? That's about it. Look, I think we covered all the stuff that I want to cover today. And if you don't have any more questions, and I guess I've done a great job explaining everything that's going on in the world, in the world of EVs anyway. So there you are. I can't think of anything else to say. So I'm going to end it with some music, and I will catch you tomorrow. By the way, don't forget social media. Follow me on at InstaMitch, Client for Strategy on YouTube, Mitchell Goldberg, LinkedIn, Client for Strategy on Facebook. And I hope to see you there. Say hello on social media. Speak to you soon. Thank you.